It is 11:35. Welcome back to the Big Show for your Thursday, July the 30th, and we are being brought to you here this morning by our friends at Cephas Auctioneers, and of course every auction has a story, always a story to tell. When it comes time to sell, trust Cephas Auctioneers. Visit cephasbids.com. That is cephasbids.com, STEFFESBIDS.com. And trust your Cephas Auctioneers. Need to remind you, too, the keyword of the hour this hour for the Inflation Vacation $1,000 giveaway. And the keyword of the hour this hour is bank, B-A-N-K. Log on to your favorite Big Show radio station website and type in the keyword bank for your chance to win $1,000 in the Inflation Vacation $1,000 giveaway. Well, as promised, we have got Brian Hoops on the telephone right now, Midwest Market Solutions. And Brian, as always, we appreciate your time here on the Big Show today.
Hey, Dwayne, it's always good to talk with you and talk with your listeners about markets. And we've got a lot of excitement, a little quieter today, but it was certainly a big range type day yesterday. And as I said, much quieter so far today.
Yeah, in fact, we kind of started the week out that way, too. A lot of pressure come Monday morning. But, this morning, Brian, when I logged on at about 3:30, the markets were pretty steady, actually, about where they are right now. Then about 5 o'clock or so, we saw a little bit of a run-up, 2 or 3, 4, 5, 6 cents in corn and soybeans. But then they've kind of backed off here. But what's going on right now with the grain trade?
Well, probably the big mover has been the wheat market, and when you saw that markets move higher, early this morning, it was directly a result of politically motivated military action between Ukraine and Russia. Ukraine sent some missiles over at Russia, once again attacking them. It hit some of their export ports and really brings into question how much product they're going to be able to ship out from their seas, not only in Russia, but also the Ukraine. And so it opens the door for possibility that the U.S. would get some of that export business. It also opens the door that if Ukraine is unable to export a lot of product, that could open the door for some corn exports from the U.S., possibly to China, because China buys a lot of their product out of the Ukraine, and again, if they're not able to produce a crop or export that crop, business may flow to the U.S., so that's a supportive factor to corn as well.
Okay, well, very good. Now, is that also affecting meal today as well as oil then, Brian?
Yeah, meal and oil have been real quiet today, but probably the biggest feature we've seen over the last, basically almost all of July has been unwinding of meal oil share spreads. For most of 25 and most of 26 up until this month, bean oil was kind of the darling of the grain room and had traded sharply higher through most of that time frame, with ideas that EPA mandates and rulings would be bullish for consumption of biodiesel and biodiesel fuels and ethanol, and it certainly was. All that is very positive, but now that it's kind of in play into the marketplace, we're seeing traders sell oil, buy meal, because that market is spread pretty heavily. So we're seeing a lot of unwinding of those spreads here in the last week or so, maybe even 2 weeks. So, yeah, that's what's really happening in oil and in meal. Corn and soybeans have tried to rally along with the wheat, but with that big rain event expected to hit the heart of the Corn Belt in the next several days, it's really limiting the upside potential for corn and the soybean market. Now, if this event is a bust, I think we could add a lot of premium once again back into the marketplace.
And I was going to ask you, too, one of the first things I always look at on Thursday morning is the Energy Information Agency's weekly report that comes out on Wednesday. And several weeks here we've seen, ethanol production up. In fact, they noted that the production last week was the second largest weekly total on record. So does that affect the daily markets or the weekly markets, or how do they look at that as far as, ethanol production and so forth, Brian?
Yeah, I can't say when that report comes out that we really get much in the way of market reaction to it. We get maybe a small movement, but that report that came out, it did show new record for this week of the year, eclipsing 2024. So we had very strong ethanol production, and that, of course, is because we're using a lot of corn to produce this ethanol. with higher gas prices, producers have maybe turned to E15 because you can buy that year round now. Down here in Springfield, that's all I put in because we want that little bit of ethanol usage. It's a little bit cheaper, so we're seeing a lot more consumer consumption of ethanol, and of course, in turn, cumulative corn use has reached over 5 billion bushels now, and we only need to be using about 91 million on a weekly basis for ethanol demand to reach the USDA forecast. Well, this last week it was almost 113, so we're well above that, and it's likely the USDA will adjust that in their August supply and demand report, increasing ethanol demand by at least 25 million bushels, and that is, longer term. That's another friendly factor for this corn market. You have a very strong export demand base, very strong ethanol demand base, and if we see more cattle moving from the border from Mexico into the U.S., we will actually probably see more corn usage as far as feed demand in our subsequent reports later in the year.
Yeah, and talk about that, because that opening up the U.S.-Mexican border, that is not too far away. In fact, we're probably going to see that here in the next month or so down in Douglas, Arizona. How do you think that will affect the, like you say, the corn as well as cattle as we move forward?
Well, as far as it kind of reconfigures our fundamentals and the balance sheets and how this cattle and feed usage is allocated, it doesn't really change the total number of head that are available in North America, but there's going to be more cattle in the U.S., less cattle in Mexico. So I think your corn exports, especially to Mexico, will start to slow down a little bit as some of those animals move into the U.S., and we'll see a change from exports into feed usage. Less exports, more feed usage. And as far as how cattle goes, we expect that packers, which have been slowing down some kill plants or shutting them down completely, will start to add more kills to account for this increased slaughter. And lo and behold, yesterday afternoon, it was announced Fort Morgan, Colorado, which has been on strike for 70 days, is now has ended their workers' strike and workers' lockout. They're going to be killing once again, and that kind of coincides with when the border starts to open and allow more cattle to come through. So that's a 4,700 kill facility that will be back up and running in a matter of weeks. And we're going to see a lot more cattle here in the U.S. It may bring the prices down a little bit for the consumer with more supply in the U.S., and that eventually is good for the consumer. We are seeing a big increase in demand as our export numbers this morning and our total beef sales for the week showed a much improved numbers, second highest of this marketing year.
Okay, well, very good. Always great to hear that. Hey, Brian, I do want to talk livestock before 1 o'clock when we get you back on here, but in the meantime, how can our Big Show listeners reach out to you?
Yeah, you can reach me directly at 417-501-5132, or you can go online and see a list of all of our offices around the Midwest at midwestmarketsolutions.com.
All right. Well, as always, we appreciate your time here, Brian, and we'll talk a little before 1 o'clock, all right?
Hey, looking forward to it. Thanks so much, Glenn.
Absolutely. Brian Hoops again, Midwest Market Solutions, and we need to take a look at the farm beat here this morning.
We speak farm. Today's top stories in agriculture and the analysis you trust. This is The Big Show.
12:54. It is The Big Show, and as promised, we got Brian Hoops, Midwest Market Solutions, back on the telephone with us to wrap up The Big Show. And Brian, we left off talking about livestock trade here, and we continue to see live cattle and feeder cattle rebounding here today. Some nice over $3 gains in both live cattle and feeder cattle, but the hog complex is trading now well over $2 lower right now. What do you see as you look at the cattle markets here today?
Yeah, let's first talk about the cattle market. We talked about improving demand in the last hour in the cattle with these cheaper prices, kind of the catalyst for that. Packers increasing their kill capacity and ending a strike and moving to some larger kill hours. Look at the fundamentals here. They're starting to improve because of the better demand. cash trade may not be down as far as what was earlier forecast in the week. We've been kind of in the free fall in the cash market, but maybe with the future stabilizing, the cash market will stabilize as well. From the technical standpoint in this cattle, and I think there's some very positives here to talk about, but October live cattle this week, they've had an outside weekly reversal, and that means that they made new lows, took out last week's lows earlier in the week, and then to end the week here, we're sharply above last week's highs and likely to close well above it. So that tells me, and probably tells a lot of the fund traders, with a weekly reversal like that, they don't want to be shorting this market and continuing to press the short side. That'll take away a lot of the selling pressure in this cattle complex when the funds stop selling every morning rally that we've seen over the last 2 weeks. So very strong technical action last week with a higher weekly close, even more strength this week with that outside reversal to the upside and a higher weekly close. I think there's some positive things going on here in this cattle complex that should translate into better opportunities down the road. Maybe we're talking another month, 2 months down the road, but should be better pricing than what we're seeing today.
Okay, well, very good. Looks like bids right now we're seeing today maybe $5 higher than bids we saw earlier in the week. So maybe that's good news, too, as we head towards the end of the week.
Oh, absolutely. Yeah, we saw, 360 trade on Monday in Iowa, only a few heads, so not enough to make the market. That was $5 lower. I'm sure some of the feedlots are holding out for at least 365 at this point in time after this rally in the futures. And the futures rally has been led by the live cattle, with feeder cattle more of a follower, which is what you could expect with additional cattle coming across the border starting August the 24th.
Yeah, about 30 seconds here. Hogs are trading lower.
Yeah, you look at the hog market. We had a little pop in the market when cattle were getting sold off. I think there was a lot of spread trade going on. And now that cattle have found some strength and stability, we're seeing the hog market getting sold off as a cattle rally. So there looks like traders may be buying cattle, selling hogs as a spread once again, as they've been down 2 days in a row with big triple-digit losses.
Exactly. Hey, Brian, how can our Big Show listeners reach out to you?
Hey, my direct number, Dwayne, is 417-501-5132, or you can go online, MidwestMarketSolutions.com, and follow us on Twitter at Midwest Markets and at Brian Hoops.